Good afternoon, folks. This is ICT with a presentation on September 12th, 2016. The economic calendar for tomorrow. I appreciate your patience today and allowing me to take care of what I take care of. When we go to forexfactory.com, this is the one I use for an economic calendar. Now, you don't have to use this one, but I just simply like this one over all the other ones I've used in the past. Over here where it says filter, I didn't mention this before, so I'm going to take a little bit of time today to do it. Any currency that you're not interested in following, you just put a toggle on that and it'll erase them. I'm going to keep tabs on these two, and the euro and the British pound against obviously the dollar. I'm not interested in anything low impact, non-economic, and I do definitely want to have medium impact and high impact. Okay. Anything down here, keep that on. And by doing that, it reduces your focus down to simply that. Now, which is nice is we have a 4:30 in the morning liquidity potential run, okay, in the British pound. And obviously the times here are relative to Eastern time where I'm located in the States. And then we have 5 a.m. ECB, President Draghi speaks. Okay, so we might have a little bit of an opportunity in pound ahead of the 5 o'clock discussion by this goober, but we'll see if there's any setups. Right now, if you look at what the market's doing, it's already pricing in something, and I was away from the chart today, but pound had a nice run up today, and so did the euro. Not as much as the pound, but we'll get into that now. But just for now, focus on the fact that we've had a really nice setup for volatility. I guess take a look at the markets. Okay, we have the dollar index. If you look at where we're at relative to the current range, we have the low to high in here, and we're sitting right at equilibrium, halfway point. And when we're in these tight consolidations like this, it makes it rather difficult to be a directional trader. So you have to trade in intraday volatility. So you have to look for small setups, take your moves, take your profits, and move back to the sidelines. Because where we're at, I'm just going to be blunt with you. I think the market's going to stay like this until we figure out what we're going to be doing relative to September's interest rate hike. So if we get a rate hike, then obviously, or if we don't, regardless, it'll give us a movement out of this range. We go into a 4-hour chart. Okay, you can see we did come off recent lows down here. I like the fact that we swept those. We came all the way back up and filled in the liquidity void right in here. All this range, that's the void. It closed that in immediately. Today we came down into this bullish order block, and it was nice to see that response there. So on the downside, we've only had the void close in here, but for the long side of the market, we've had a stop run here. We come back down into the bullish order block, which is this down candle right in here, and there. Okay, and we had some willingness to want to rally away from that. We still have a nice layer of stops right above. Hello, Bella. Right above here, we've watched in the past, and we have them as well here. So we have two different liquidity pools of interest. And let's take this fib off. And actually, I'll show you we're actually in a smaller range, still in equilibrium for it as well. We have the range here and here, and we're right at equilibrium as well for that smaller range. So we're in a real tight consolidation. So what we're going to be waiting for is expansion. Okay, it has to move out of here. In other words, it can't just stay in here and we're going to try to pick the direction. That's not how you do consolidation trades. You wait for the market to run. Once it runs, it'll give you a new void, or it's going to run to a liquidity pool. One of the two is going to give us a trade scenario. But you try your hardest to try to keep from trying to pick out the direction where it's going to go. I don't care what the direction is going to be. I'm not one-sided. I don't have it where it has to be this side of the market long or this side of the market short. I just want it to move away from equilibrium. Once it moves away from equilibrium, then it'll give me something to trade on. But until then, we have to sit on our hands and just simply wait and let the market give us an opportunity. Don't try to force what we think should happen in the marketplace on price. Into an hourly chart, we'll see that void close out real handsomely. Up candles in here. This is the bearish order block right there. It went right up to it, hit it perfectly. Highs 95.57. The low on this candle, 95.57. Perfectly hit. Immediate response down into small area of liquidity right in here. Down candle right for the out move. You can fine tune this. This is on the daily chart. Now we're going to drop it down into bullish order block here relative to the hourly chart, and we have a nice response there. I don't think, unless it just completely wipes it out on a news event, I don't think we're going to come down here for these lows to be cleaned out from where we're at. I think if it does, it'll want to go higher and clear out this high one more time. And if it does that and rejects, that means they've taken out the stops. And obviously, if it takes out the stops, it's going to want to go the other way strongly. Much like we see here. The lows were cleaned out and immediately ran up here and they closed the void. So we would be looking for a move back above this high, okay, and we would look for some form of bullishness to get back long to make a run for that. Or if we come back up above this short-term high and we break down below, if this low is intact, if we break down below that, we would look for a resuming of price to get back up to this breaker. Okay, so because we're looking at these highs here, this high here and this high here, price came up and rallied. If we lose all this market structure and ultimately this low after it rallies, it has to rally from here a little bit more. If it breaks that low and we trade down and come back up into this area right in here, that would be a sell around 94.85, 94.90. Could be as low as 94.80 in formation, and then we would look for a run down below the lows here. But right now, they're just probable scenarios. Okay, nothing says it has to happen that way. These are just things we're going to watch and see if it comes to fruition. But right now, as it is, we sit on our hands and wait. It's not in an area where we can do anything with a high with a high degree of probability. All right, for the euro, much in the same vein, we are in equilibrium. The market is still winding up tightly, and it's all based on what we're going to see in terms of the interest rate. So we're right at equilibrium again. It could go either way. I could give you the argument that it wants to go higher to clear these stops and these stops above here. But then we have another liquidity pool here that could reach down rather easily and clear that out. It could come down just to this order block here and give a response. So again, these are all scenarios of what could potentially be a setup for this week. I don't think that we're going to see anything that we can trade while we're in consolidation like this until we expand higher or lower. It has to move from these levels to give us a setup. Again, this is the hardest part about trading. It's the hardest thing in your development is learning to sit on your hands and wait. I know it feels like you need to be doing something every day, but there's all kinds of things we can be studying and practicing and be able to teach on while the market's waiting for its next leg. We're not waiting very long many times, but we are going to wait for the smart money to reveal their hand. Looking at a 1 hour chart, we'll drop down and skip over the 4 hour. We did have the market clear this level of stops, and this is rather clean. I don't like the way that looks there, and I really like this. I like this on fiber. I like the fact that we came up, rejected here. I like the fact that we cleaned these highs out here, okay, and showed a willingness to want to drop down. If we can continue with that, we would be looking for a run down to 111.70 to 111.60. And if it runs further, we would look for 1140, which would clear these equal lows out. And if it runs there, then we're going to probably see a resuming of the down move to take us below 111.20. But again, we're in consolidation. We're trying not to know what the next leg is. We're waiting for that to be given to us, and then we'll just wait and trade accordingly based on the liquidity pool, order block, or fair value. Cable had a really nice reaction today. Caught a lot of traders by surprise. Market moved below this short-term low, and it quickly rallied up. We cleared this level of stops, and relative to its current range, this one looks like, and this is the reason why I said I don't want to sell this one. I just think it's got a lot of reason to go higher, and I don't want to be caught up in something that, even though it looks strongly technical to be short, I'm going to be very leery of doing it. I would have more emphasis placed on the long side on this currency specifically because, like I said, of Brexit. So, and admittedly, I had a typo brought to my attention on one of the presentation slides for the teaching for this week. I'm going to have to go back in here and clean that up. And I think the first one had some issues with the audio, so I'm going to try to clean that up as well and correct that consolidation high to say consolidation low. Thank you for that. The gentleman that brought it to my attention. The U.S. CAD, this is the highlight. We were watching this all last week, called just about everything that had to do with this up move. From the turtle soup long, retracement back into a breaker, rallied, further movement up. We had this fair value gap, okay, which is exposure inside of a void. Okay, so a larger range, okay, and it has a small little pocket in there where there's no trading, it's just all wicks. That's a fair value gap, okay, and we called for that to be filled. It hit it perfectly here, consolidation again, then expansion, cleared this level of stops, and then ultimately closed in this small little fair value gap as well. Went right up into it, the low in this candle here, all the exposed range between this high and this low, which would look like this. So it's going to put it in terms of horizontal lines. And it came right up here, filled that in, buys the candle, perfectly respecting it, and then quickly giving up the ghost. Once it broke down, it came back up, returned back to a bearish order block, which is the bottom of this candle here. Let's take a look at that. Right there. The low comes in at 131.08. Today's high, 131.08, perfectly. So we did take out some stops. This is the real first run on liquidity that's being trailed behind the marketplace. So again, to me, even though it looks like it's nice and weak here, it may be just a run down to take out short-term liquidity below the lows, or in other words, to shake out the weak bulls, the bulls that want to have a very ultra short-term tight stop. I like the fact that these buy stops are still kept in place. This is a reasonable expectation to have when you clear out a high, like we did here and rejected. We've cleared out stops trailed below the lows of the marketplace inside of a bullish order block as well here. So it'll be interesting to see if we get back above. If we break above the midpoint of this up candle, that would indicate that the institutional order flow is still on the bullish side, and we probably would run to around 131.50 to 131.60. And if we get legs there, we're looking for 131.80 to 132 big figure. So couple that with the fact that we have the dollar showing this price action in here. If we can run up, it might give us the legs to go higher for US CAD to take those objectives we just mentioned. And cable, I just don't want to sell that, even though I see this real nice liquidity void. I just don't want to go there. And the euro dollar, I really like the fact that it's liquidity void in here. In other words, we have the exposed range between this low and this down candle. So what we're looking for, if we get weakness in the euro dollar and strengthen the dollar, all of this range in here is what we're looking for to be closed in. Okay, so in other words, the price should come down, close all that in, down to 131. I'm sorry, 111.70. Where am I getting 131? So that's why I'm looking at that. So I'm slanted for a weaker euro dollar, and that'll probably see euro dollar slide and pound either remain consolidated or up. And then obviously that would be weakness for euro pound, which we're not going to look at here. I'll look at that tomorrow. And that's that. Right now, it's just we sit and we wait. We're in the middle of the range. You have to wait. And until then, I wish you good luck and good trading.